They are openly saying that that tapering will happen. It's not an if, it's an absolute when. They were very clear that their intent would obviously not be to crash the economy, but they were certainly and have every intention of tapering those off. So obviously they're telling people to be prepared for that. Hello there and welcome to the VIP Financial Education YouTube channel where we help you go further, faster financially. I'm your host, Michael Matthey. Well, as many of you may know, Jerome Powell, who's the chairman of the Fed, they had their committee meeting this week, and afterwards Jerome led the charge as far as giving their press briefing on kind of that 2 days worth of activities and let us know what really came out of that. Now, there's a ton of information that was obviously discussed during those 2 days between those folks, and I think that there were some really good positives that came out of that. I also think that there were a couple negatives, so we're going to go ahead and discuss that throughout the video today. If you like content like this, you want to hear more like this, go ahead and hit that thumbs up below. Now let's break down some of this information they discussed, starting with the stock market. Jerome Powell wrapped up his hour-long session with the major markets coming off of their session low, recovering some of the initial losses following the Fed statement and economic projections. In the bond market, yields ultimately pulled off of their highs during Powell's remarks. The 10-year Treasury yield up 6 points for the day. Yields obviously move inversely to prices. And stocks rebounded from their session low after Powell seemed to indicate that the projected 2023 rate increases were not an absolute certainty. Now let's talk about interest rate hikes. The Federal Reserve's latest dot plot projections pointed to at least 2 rate hikes in 2023, which really spooked the market. But Powell said those projections were to be taken quote unquote with a grain of salt. He said liftoff is well into the future. The central bank now expects gross domestic product to reach 7% in 2021 as opposed to the initial projections of 6.5%. It also raised the GDP forecast in 2022 to 2.4% compared to its previous expectation of 2.2%. I think that it is ultimately going to happen before 2023. 2022 Q4 would be my prediction. And here's what Powell said on the tapering of asset buying, which is what they've done specifically during the pandemic to keep the economy propped up. So the tapering off of these asset purchases by the government could ultimately lead to a big deal. According to Powell, you can think of this meeting that we had as the talking about meeting if you'd like. I now suggest that we retire that term, which has served its purpose. Powell said that the Fed would give advance notice before the tapering off of the purchasing of these assets, but it will certainly depend on the progress of the recovering economy. They are openly saying that that tapering will happen. It's not an if, it's an absolute when. They were very clear that their intent would obviously not be to crash the economy, but they were certainly and have every intention of tapering those off. So obviously they're telling people to be prepared for that. Now let's talk about inflation. Powell said that inflation could run hotter than the central bank expected after the FOMC, which is the Federal Open Markets Committee, dialed up its inflation expectations for the year. As the reopening continues, shifts in demand can be large and rapid, and bottlenecks, hiring difficulties, and other constraints could continue to limit how quickly supply can adjust, raising the possibility that inflation could turn out to be higher and more persistent than we expect. The Fed now sees inflation running up to 3.4% this year, above its previous estimate of 2.4%. And it's also hiked its inflation expectations for 2022 and 2023. Inflation is certainly going up. They're openly talking about it right now. It's already higher than projections were to be for 2021, and they're already starting to get out in front of 2022 and 2023 as well. So let's keep a close eye on supply and demand bottlenecks, which could cause more inflation obviously than the Fed expected due to things like the labor market, people going back to work, schools reopening, unemployment benefits starting to end, and other things like airline prices, used car prices, and of course lumber prices. Lumber prices have ultimately started to kind of fall down a little bit finally because some of the quote-unquote lumber hoarders, which is an absolute real thing, people were obviously hoarding the lumber, which was jacking up the price because demand was there, supply was low. Now they're starting to sell off some of their hoarded lumber over time, so that market is starting to finally decline. Now we're going to dive into mortgage rates. According to Mortgage News Daily, the ever popular 30-year mortgage has gone up decidedly because of this news to 3.25% when it's been sitting below 3% for a number of months at this point. And by February, the fixed rate, or the average fixed rate on a 30-year mortgage was at 2.75%. So obviously you can see that's a 0.5% right there. We talked about in a previous video, those rate hikes can really make a difference in your monthly payments and ultimately your long-term payoff amount, the principal amount that you owe on that said mortgage. Mortgage rates do not follow the federal funds rate, which was unchanged on Wednesday, but generally track the yield on a 10-year treasury, which did move higher. Mortgage rates are ultimately affected by the amount of mortgage-backed bonds that are purchased by the Fed as well. And that really caught some investors off guard and caused bond yields and mortgage rates to move higher than expected. According to Matthew Graham, who's the chief operating officer at Mortgage News Daily, markets were somewhat surprised by the Fed's rate hike outlook. Granted, the Fed funds rate doesn't control mortgage rates, but the outlook speaks to how quickly the Fed would need to dial back its bond buying program. Again, that's the tapering. Those programs definitely help keep rates low. Mortgage rates are now about 1/4 percentage point higher than they were just last Friday and are about 1/4 percentage point higher than they were a year ago. While that may not sound like a lot, that's significant to those that are considering doing a refinance on their mortgage. We did a video recently on when is the right time to do a refinance, or if it is the right time to do a refinance on your house. That 1/4 or 1/2 point can make a big swing on those monthly payments. So all in all, like I said at the outset of the video here, I think that there are some really good positives. I did have a couple negative takeaways from this. Again, I like the fact that inflation was honestly acknowledged, and it seems like the interest rates are going to be raised sooner than they originally had anticipated. So we definitely want to keep an eye on that. They're saying 2023. Again, I'm predicting Q4 of 2022, but they are kind of reeling that back in. Their initial projections were out further than that, and now they're saying 2023. There could be and should be, most likely will be, 2 rate increases. And again, that's going to be based on the growth of the economy. Let's keep an eye on the pandemic, the recovery of the economy. Obviously, things like the pandemic could positively or negatively affect that outcome. We really love breaking these videos down. We love going out and doing the research on your behalf, reading the tea leaves so we can put together these summaries for you. If you like that, you appreciate that, you want to see more of it on the channel, please hit that like button below. If you're not already subscribed, we're always looking to get new folks on the channel, so go ahead and hit that subscribe button and go ahead and hit that bell below if you want to get notifications for additional content like this from our channel. And again, thanks for joining us on the VIP Financial Education YouTube channel. Until next time, take care and make it a great day.